To my surprise, after doing 60 some odd Watchlist Wednesday videos, this is only the second FANG stock that I'll have talked about on my channel, with the first one being Apple. Now, you've probably seen this company a lot on the news recently, and you also probably saw either the title or thumbnail for this video, so you know the company that we'll be talking about this week is Facebook. Hey everyone, and thanks for joining me today. My name's Matt, and before we get started here, I just need to say, not advice, don't take this as advice. If you need advice, speak to a financial advisor, but this is just for your entertainment purposes only, so do not make any investment decisions based solely on what I have to say here. Also, remember, if you like this video, it is a 5-cent donation for charity. Subscribing is a 10-cent donation for charity, and once again, I'll eventually update those numbers because we've had some pretty dramatic changes recently, and I think we'll actually be at the point where we'll have a sizable donation, which is something I'm very excited about. But anyway, back to the reason why you're here, which is to talk about Facebook. Now, clearly, this is a company that needs no introduction. I'm sure all of you have at least had a Facebook account at some point in time, or are still actively using one today. Now, Facebook recently hit a milestone, and that was becoming a $1 trillion company or having a $1 trillion market cap. Unfortunately, their stock price has gone down, so they are no longer a $1 trillion company, but they're not far from it. And that had me kind of thinking, well, if this company has already hit $1 trillion, is there still an opportunity for growth here? And I believe that there is, but let's go ahead and start with the numbers here so I can help justify that claim. Now, you'll also see from the numbers here, we are going to be doing a comparison. The comparison is going to be with both Twitter and Snapchat. I did feel that those were relevant. While Facebook is a little bit more broadly diversified as a business, they are all still social media companies, so I thought that might help give us a good range for what to look for. Now, starting off here, you'll see that I have Facebook as the $1 trillion market cap, and that's because I made this chart earlier in the week when they were still a $1 trillion company. Unfortunately, they're not anymore, but they're not far off from it, so I just haven't had the time to go back and change these, but we'll just work with what we have so far. And to me, it really comes as no surprise that Facebook has the largest market cap of these three companies, but I was a little surprised to see that Snapchat's market cap is now double what Twitter's is. And I know Snapchat's stock has, I guess it's Snap now. Do I need to just drop the chat? Is it just Snap? I don't know. I don't use Snapchat anymore or Twitter, so don't ask me about that. But not that long ago, Snap was probably a much smaller company from a market cap perspective than we have for Twitter. But clearly, as their stock has been on a little bit of a rally over the past year, then they have obviously exceeded the market cap of Twitter. Moving on to the price to book ratio, yes, we are doing price to book this week. It's not a price to earnings ratio, mostly because Snap or Twitter do not have a price to earnings ratio. But there's something unique here about price to book that I wanted to touch on. And you've heard me say before, certain metrics have guidelines that we can look out for, whether some of them we look for numbers under 30, some of them are numbers under 1, sometimes we like the range between 1 to 3. When it comes to price to book, though, there really isn't a general guideline for you to follow along with because it does vary significantly amongst each sector. So you really want to look at the average for that sector specifically. Now, the average for the social media sector is around 3.5 times when it comes to price to book metric. And as we could tell, using that as our guideline here, all of these companies are definitely overvalued, specifically Snapchat, which to me comes as no surprise. Again, sorry if it's Snap, I'll probably just continue saying Snapchat though. And a lot of other metrics point to Facebook being overvalued as well. Now, I believe their PE ratio is somewhere around 31 times earnings, which isn't too bad if we're following the PE under 30, but a lot of other ratios do point to them being significantly higher than what the average is. Now, I'll say the 28.68% revenue growth for Facebook is something that is good to see. I'm not discouraged by that by any means, but admittedly, I did think it would be a little bit higher. Now, that has to do with some of the acquisitions, which we'll get into a little bit more later in this video, but I was just under the impression, and with companies actually boycotting running ads on Facebook last year, now they're starting to get back into it, I did think that number was going to be a little bit higher for them. I was expecting somewhere around the 40% year-over-year revenue growth. However, as I just said though, 28% for a company that's been around since I think 2004 and is a very well-established company isn't something that's going to discourage me from this stock. Now, it's good to see Snap is finally making some money and having a revenue growth of over 50%. That would be encouraging to see, especially if you're already a shareholder. For the longest time, it seemed like they weren't making any money at all, so I was really struggling to justify why anybody would invest in that company. Full disclosure, they're still not really a company that I'd ever really be interested in, but it is good to see that they're able to grow their revenue, and I would actually be curious to see what else can they do to help monetize their platform, aside from really just running ads. Twitter's revenue growth, though, is obviously the smallest at 13.35%, and I do actually believe that's going to change. I heard some talks about them rolling out like a new system where you can have a premium premium Twitter service where it lets you, I don't even know. I don't use Twitter either. So apparently they're rolling out some kind of paid membership program for Twitter. I'll be curious to see how many people actually utilize that, if there's any significance there, and also if that does change their revenue growth. But again, we're not really here to look at Twitter or talk about their opportunities. We're still going to focus on Facebook. Now, beta. We finally have beta back on our numbers here. It's something I used to talk about all the time, but just haven't been including in a lot of videos, probably because I've been looking at a lot of newer companies where there's just not enough information to get a good beta from. But again, I was a little surprised to see how high the betas were for both Facebook and Snap. I did assume with the popularity of both of these companies that they would actually have a little bit more stable of a performance, but I guess social media is still a very much growing platform, and with a lot of scrutiny that we see with Facebook, I guess it does make sense for them to be a little bit more volatile of a stock. But what really stands out to me is Twitter being less volatile than the market itself, considering they face a lot of the same issues that Facebook has, especially when it comes to like privacy, banning presidents on their platforms and all that stuff, which we're not going to get into. So to me, it was a little strange to see just the differences in the volatility between these three companies. But to wrap this up, as we could tell here based on their quick ratios, these companies are very healthy financially, and I was very impressed to see how well Facebook does manage their cash. Because I think I've referenced this in the Roblox video where I said it to me seems like once you put up these platforms, sure you do need staff members, but the system itself should kind of be on autopilot. But actually when you look at Facebook, I believe they have over 80,000 developers working for them as a company. Again, I could be wrong there. But that means that this is a very expensive business to run. So for them to still have that much cash on hand, maybe they're planning to get sued one day and just be able to pay off the debt. I don't know. But regardless, they have a very healthy balance sheet for a company that still makes pretty aggressive acquisitions and is growing even though they've been around for over 15 years. Now, from looking at these numbers, if I'm being honest, Facebook is about, other than the revenue growth, what I would expect for a company at their size growing the way that they're growing. It's nothing too impressive. At face value, it looks like it's an overvalued company. So I did want to take a little bit deeper of a look, and I did go back to Simply Wall Street's discounted cash flow analysis. Now, looking at that did give me a little bit more optimism for this company because, as we could tell, they are actually an undervalued company, again, using free cash flow to equity or discounted cash flow analysis to get that number. Now, in case you're new here, I'd just like to give this disclosure. What this graph shows is what the stock value could be based on the future free cash flow of the company. But it does not guarantee that it's going to grow to that price. But I like to use this as a metric because it shows me the potential this company has, or it's just, I think, a better way of looking at if a company is under or overvalued than just simply relying on things like a price to earnings ratio, which can be easily manipulated by management. And obviously, seeing this being an undervalued company from this standpoint is something that does get me excited to potentially invest in this company. Also, when we compare that to how it looks for both Snap and Twitter, we could see that both those companies are either just perfectly right where they are or overvalued as an investment, which again kind of gives them the negative checkpoint for me where it gives Facebook an absolute positive bonus. And all those numbers are great, and I think they really only tell just one side of the story because I don't think we can actually understand what Facebook could be doing in the future simply by looking at these numbers or even by looking at a chart. And I think we need to look a little bit deeper into what Facebook can do to make this a promising investment despite them having $1 trillion market cap, give or take. And to start that off, I just want to say, didn't it feel like around 5-ish years ago that Facebook was kind of going out of style and there was other platforms that would probably eventually take over Facebook, similarly to what they did to MySpace? I know at least I had those feelings, but I was apparently wrong. The presentation does show pretty steady growth with their daily and monthly active users, which again is something that we'd like to see with these platforms. It's hard to believe that a company like Facebook can actually still get more and more new users to their platforms, but Nonetheless, they're still able to capture new people to their platform on a consistent basis, which is something very impressive to see. Now, this chart does only really show around 2 years worth of info, but the one from the annual report was just too hard to read, so that's why I popped up the one from their quarterly report. I'll show you the annual one just so you can see what I'm talking about. It was not easy to understand what they were talking about. Now, I don't believe this consistent growth in new users actually has to do with the Facebook platform itself, the social media side. I actually think a lot of it does have to do with their ability to separate themselves just from Facebook and adding on new other social media platforms, communication methods, or other systems. But even with the Facebook platform alone, I think that they still become a almost necessary addition for a lot of businesses. I know the previous real estate company that I used to work for had a private Facebook group where we did a lot of our communications. It's where you'd ask if anybody can do a showing for a house, or you'd post a new listing to that to get some attention to it. We would talk about meetings that we would have, if the office was going to be closed. Anything along those lines all happened through a private Facebook group. And I've actually heard of a lot of other smaller businesses utilizing Facebook for those communication methods. Also, I've seen a lot of businesses recently that actually use their Facebook page as their business's website, which, take it or leave it if you think that's an ideal situation. Nonetheless, though, it's a great way for them to be able to keep everybody informed pretty easily. You don't have to be very tech savvy to update your business hours on a Facebook page. You don't have to go through like a whole website, code all that stuff, and make the changes. You just click a button and it's done for you. It also gives you the ability to advertise your business very seamlessly. Now, still to this day, 98% of Facebook's revenue comes from ads, but I think some of the acquisitions that they've made will start to change how much of their revenue is dependent on their ads. When it comes to these acquisitions that I keep referring to, I think this is one of the areas that Facebook has to grow. As we all know, they are the owners of companies like Instagram, WhatsApp, and Oculus, while also building out some of their own platforms like Messenger and the Facebook portal. But the huge opportunity that I see here for Facebook does have to do with Oculus. Now, you've heard me say on my channel before that I think we are really in the very first stages of virtual reality. And I see that becoming something that is more and more prevalent in the years to come. And I think it's something that a lot of other businesses, practices, and procedures will start to utilize more frequently. And I don't even mean in the sense of just being able to watch a live concert as if it's in your living room through an Oculus headset. Even down to some of the systems that they have where you can have like 5 computer screens on your Oculus system can really help other businesses out, because it's going to be probably a lot cheaper to be able to have a headset that people wear instead of having to buy like 2 computer monitors for each person, then having the desktop, all the desk space. So I really do see this whole virtual reality thing just becoming such a big part of our lives in the future. I always do think it's kind of funny, though, how they used to say don't sit too close to the TV because it'll hurt your eyes or something, and now we literally have TVs that are just like pressed against your face. I don't know, a little side note, but I just think that's kind of funny how that all worked out. And with Oculus being considered one of the best virtual reality headsets or standalone virtual reality headsets, as well as being one of the top sellers, makes me believe that Facebook is really in a position to be on the forefront of this evolution, and it's something that I'm very excited to see how it all watches out for them. And that's where I believe the real growth opportunity for Facebook is. I don't necessarily think it can really be on the platform anymore. Of course, you'll still add the daily active users to that and the monthly active users, but I really do think this virtual reality aspect, maybe even Portal will tie into that, can help Facebook still be a growth company despite them being at $1 trillion market cap. Now, of course, we do have concerns when it comes to Facebook. We can get into their privacy thing, but I won't because that could just take a long time, and I just don't really like talking about Facebook's privacy policies. Also, I'm not really a huge fan of the way that Zuckerberg has been on Capitol Hill. It seems like almost weekly for the past few years. But I will say, if you watch some of the sessions that he's had on Capitol Hill, I think he actually does a pretty good job defending his company. Now, take it or leave it if you agree with him. That's not what we're discussing about. But he does represent his company in a way that you could tell he still firmly believes in Facebook as a business, not just something that is making him a billionaire. But as I mentioned, that's really my only concerns, and I still think this company has a lot of room to grow. And just to highlight those from what I mentioned earlier, because I know there's been a lot of information, the company is undervalued from a cash flow perspective, a leader in the VR space, can potentially be a vital resource for businesses, has a global presence with millions of daily active users, and also, me and Zuck have something in common.
Backyard, where I am smoking a brisket and some ribs. I'm making meats now. Smoking these meats here. Our little meat smoking. It's smoking.
So with all that said, I'm going to go ahead and add this one to the portfolio. Let me go ahead and get all that pulled up and I'll be right back with you. All right, so I did add 15 shares of Facebook to the portfolio. I purchased them at $355.64, and unfortunately they're trading at $350.44. So that has us with a loss around $78, give or take. But again, I don't really see that being too big of a problem right now, especially because this has dipped since I bought it. It dipped below the $1 trillion market cap. I really don't see them taking a long time to get back to that $1 trillion mark, or at least I hope not. So it's a position I am surprised that it took me so long to get to, but personally I really did just want to wait until a lot of the legal issues going on with Facebook were settled or handled, or at least we just had a little bit of a clear outlook for what Facebook's future looks like. But overall, I have to say our portfolio is doing pretty well. Now, yes, we still obviously have Blackstone and Shopify leading the charge here with how well they've been performing for us. But what's really helping out this portfolio is we actually got about $1,000 back from Tesla over this past week. Last week, I think we were still negative $1,400, give or take, and now we're only down $350. So that has really helped put this portfolio back into a good position, which is why we always put emphasis on buying whole positions instead of trying to sell out and cut your losses before they get too bad. Obviously, that was a rough ride, but we're finally starting to make a little bit of a comeback here. But I think to date, this is the highest at least this portfolio has been, so I'm pretty excited to see that. Anyway, though, that's my review of Facebook here. So take it or leave it. I know that this company is already large, and I could definitely understand if you think we're getting into this a little bit late, but I still see a lot of opportunity here, and I'm excited to see what the future looks like for Facebook. So if you enjoyed this video, just if you don't mind gently hitting the like button, that'd be super nice of you, and if you haven't subscribed already, I just ask that you consider doing so. With all that said, though, I'm going to wrap up here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day. Happy 4th of July to everyone as well. Friday's actually my birthday, so I'm basically done for the week. So everybody enjoy your weekend, and I will see you next week.